happening, y'all? This is Jeff Kohler, aka the Option Addict, from over at www.tradingaddicts.com. After a little break from doing some videos, I'm back with another weekly watch list. I'll start with a little bit of market analysis. What I've been paying close attention to lately is this break of the trend line in the S&P that dates all the way back into the wee days of March. And you'll see that this is pretty consistent across the board with the exception of the Dow. But prices have come through, they've broken beneath, and have really just been kind of pegged and walking along the underside of this trend line. What we've been observing lately, and especially in the last week, is the fact that the Dow, the NASDAQ, the Russell all went on to sell signals. The Dow having flipped and gone back onto a buy signal, the S&P still maintaining its buy signal. But one thing that we've also been talking about is kind of the underlying weakness that's going on in some of the bullish percent values across a lot of individual sectors. After this 5-day run in stocks, none of them have really flipped back and gone back into bull confirm mode. So I don't know. I'm a little skeptical here, but we're heading into options expiration week. We've got earnings coming up, so I don't really want to take a real strong directional bias heading into this particular week. What I want to do is focus on good-looking, easy-to-manage setups. I want to really pay close attention to price action and, most importantly, volume. That's been kind of the theme as we've been trading a lot of small-cap positions lately that have worked out really well. And so I want to apply that just to anything that you trade this week, is really just keep an eye out for price and volume. And that's really all I can tell you in terms of market analysis this week. I think we're at a pretty decent spot where prices could just continue to trade out in a range. But I think there's got to be some kind of a significant catalyst for the S&P to take out its highs. And I don't see that coming this week. So with that, let's get into a little bit of stock picking, shall we? I'm going to start off with a couple of buy the dip candidates, sell the rip candidates, potential breakouts and potential breakdowns, along with my favorite, some $10 darlings. Take a look. Alright gang, and now on to some price patterns. Let's start with Activision, which is one that is off of last week's list, but what I like is the entry point. So big consolidation pattern, right? Symmetrical triangle. Got the breakout, a little bit above average volume. I mean, it wasn't a big move, but it's there. Price is pulling back and sitting right around 12.5. Prices improve here on Monday morning. I think that's a play you got to go after. Right here, right now. I like Activision. Looks good. Wellcare. WCG. Take a look at this one. You can see kind of what I'm looking at here. Kind of an ascending triangle. Tried to break out on Friday. The volume, was there. It was beautiful, but it traded right back into its range here. So what I'm looking at is a breakout, hopefully by tomorrow. And if that does, you can look for probably about a 15% move. I expect prices to get pretty close to about 29 or 30. Within, I give it a couple of weeks. So far, that's looking good. Other confirmed patterns here that are looking pretty special is old bid. You look at this one, the volume was there, the breakout occurred. Now, it's tough to buy up this much, right? I mean, there's still a lot more in store in terms of what this price pattern suggests, but if you can get this thing to pull back anywhere around 18, you got to buy that ahead of a move to 20, and maybe even higher, 21. But I like bid, but it's for me, I got to buy this on some type of a pullback. All right, next we've got AutoZone. And we've been all over these auto parts stores, going back to O'Reilly, Advanced Auto Parts. I mean, there's just been a lot of weakness in these names. I like this little descending triangle here. And prices, lately, you could call this even a little bit of a bear flag. But as it starts to break down out of this, I'm looking for an eventual breakdown of 140, which pushes prices down to about, I think, over about a month's worth of time, between 130 to 125. Next, we've got Yong. I love what this little stock's doing. Get a lot of volume. The volume's been increasing with this trend. I mean, it's looking really, really good. As of late, I like this little flag. And there it is. You might even break this down into a 30-minute chart and see a little pennant, little triangle pattern here, but it's breaking. So if you see a little bit of volume and prices are still holding up here around 10 and a half, 11, I think you got to buy that with both hands. Also, let's go over to Hong Kong and look at CEO. Oh, look, this has been a pretty important breakout. What I want to see is prices build a base up here between about 140 and 145. if that happens. Volume's been pretty active here towards the upper end of this triangle, so the breakout to me suggests that there's more continuation in store for this one. So if you're bearish, if you're looking for a bearish play here this week, I like this Pakar. You probably see what I'm looking at here. Shoulder, head, shoulder, and right at that spot where I think you can be a little bit anticipatory. Bet on an eventual breakdown beneath 35 here at 37. It's kind of a sell the rip candidate, but for a much bigger price objective. This ought to put this thing back down to 30 in about a month. Next, look at Yahoo. Yahoo just looks nasty, really, really bad. And so I look at this, kind of a triple top, up at the upper end of this trading range. I think this is a decent spot if you're a bear. I like what Yahoo's doing, and I like that weakness that we saw there on Friday. Just, while the market was doing okay, Yahoo just sucking wind all day long, and big volume as prices have rolled over off of 18. So I think here, if it starts to break down, you got to get in on that. Look for a move to the lower end of its range, probably about 14, 15. Tidewater, TDW. This is one transport. This has been ugly, been kind of weak. You can zoom in on this, and it's kind of a head and shoulders pattern, if you will, but volume, pretty high levels of volume up here while prices are starting to roll over. So I like this as not only as a sell the rip candidate, but also within the confines of this triangle here, an eventual breakdown beneath 42, which ought to send this thing cascading quite a bit lower. ICE. Take a look at this guy. Let's go in here into a one-month chart. Look at this. Prices were looking pretty active here on Friday, and I don't know if this little breakout means that ICE is going to head back over 100, but I think using the low here from Friday's session as a place to put a stop. If the market's starting to bid up a little bit tomorrow, ICE, especially CME, you'll see CME on my dip buying list. I might look to enter that with a spread later on this week, but the exchanges aren't looking too bad here. Last but not least on my list of glorious price patterns is old Starbucks. What I like here about Starbucks is this nice little coiling action going on right up here near its highs. I like that it stopped right at the lower end of its range, even though it was weak. So if I can see prices trade up just a little bit higher, Starbucks has got wonderful options, by the way, but if it trades up about above 20.5, I think you got to buy that for about a 2-point move. So that'll conclude this week's analysis. If you want to see how we handle some of these positions in this upcoming week, please visit us at www.tradingaddicts.com. This has been The Option Addict. That has been my watch list. Thank you for watching. Have a fantastic week. I'm out.